Hey guys, it's that Dividend guy coming at you with the Robinhood portfolio update. Happy Tuesday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. Keep in mind, guys, yesterday there wasn't an upload simply because the stock market wasn't open. So we're gonna have 4 updates this week, and I'll try to get another video out to you guys every single day. So we're gonna be a little short this week, but still gonna keep the videos coming. So as for today, we are down about $470, down 1.14%. For the week, we are down $1,100, down 2.67%. For the month, we are up $572, up 1.44%. The 3-month mark, we are up $929, up 2.36%. For the year, we are up $8,300, up 26%. And then we are up $9,857, up 32.3% since April 13th of 2018. We have a buying power of $8.51 after the transactions that I did today. I did sell out of 3N, and I used that money to purchase shares of Clorox, a share of Procter & Gamble, and some shares of Altria. So, jumping into the portfolio, we've got realty income, which dropped nearly $1 today. We have 120 shares, $8,500 worth of market value. Average cost is $67.02. 21% of the portfolio is in realty income. Today we're down $150. Total we're at $483. We do have a dividend coming in on the 15th of 28.26. That is a monthly payer, so we get paid a little over $28 every single month. Love realty income. I want to add more, but as you guys can see, an average cost is $67. It's sitting above $71 a share. It was 72 bucks a share, which is, it's fluctuated from like 68 to 72 for a while. So I'm not touching the stock at these prices, but I do love it, and it gives me a considerable amount of passive income every single month. This is actually the retiree stock, as in people who are retired use this stock as like a regular paycheck. So I have a pretty big allocation towards it because it boosts dividend every quarter, and I want that consistent growth in my portfolio, and I love real estate. Next, we've got Coca-Cola, 65 shares, $3,600 worth of market value. Average cost is right about around $54 a share. Around 9% of the portfolio is in Coca-Cola. Today we're down around $58. Total we are up 83.45, up 2.35%. Then we've got Altria, which is one of the stocks that I bought today. 175 shares, $8,900 worth of market value. Average cost is $47.83. 22% of the portfolio is in Altria. Today we're down $10.58. Total we're at $550, up 6.6% on Altria. Then we've got one of my personal favorites in AbbVie. 75 shares, $8,100, almost $8,200 worth of market value. Average cost is $81.20. 20.25% of the portfolio is in AbbVie. Today we're down $194. Total we're up over $2,000, up 34.3% on AbbVie stock. Then we've got the newly added Procter & Gamble. We only have one share, $143.78 on market value. Average cost is $143.84, so we're down a little bit. 0.36% of the portfolio is in Procter & Gamble, and of course the total and today's return are going to be the same because I bought it today. Same deal with Clorox. We have one share, $168.79 for market value. Average cost is $168.83, so we're down a little bit on Clorox. 0.42% of the portfolio is in Clorox stock. Today, in total, we're down 4 cents. Next, we got the Ducky Company. 115 shares, $6,400 worth of market value. Average cost is right around $50 a share, so $5 above my average cost. I'm not touching that. Around 16% of the portfolio is in Aflac. Today we're down $368. Total we're up $700, up 1 234%. It's awesome. Then we've got Beatrice, which I added last week. We've got 300 shares, around $4,400 worth of market value. Average cost is $14.52. 10.9% of the portfolio is in Beatrice. Today we're down $67. Excuse me. Total, we are up around 44, up 1%. So guys, the reason that I chose Beatrice over Pfizer and over ExxonMobil was because ExxonMobil's metrics are really weird because how oil has been affected by the pandemic and all the issues that we've had with oil. And the reason I chose it over Pfizer was because a lot of the drugs that I liked that Pfizer owned were actually spun off with this company. So I wanted to go ahead and get some Beatrice shares. So the other reason that I really do like Beatrice over those other two is Pfizer has a payout ratio of like 55 to 70%, depending on how well the vaccine does for the company. And from what I've seen on multiple sites, ExxonMobil's paying out more than it actually generates in free cash flow. So I don't want to touch Exxon because I don't think the dividend's going to be cut, but I don't want to be in a company that I'm like paranoid about it cutting the dividend. So Beatrice pays about 12% of its free cash flow in a dividend, and it's a lot cheaper than Pfizer. Pfizer was about $55 a share when I sold it. I had it originally at $40 a share, so Pfizer made me about $35 in passive income. Beatrice right now makes me about 33, and let me explain to you why that's so significant. I would much rather have a newer company, because Beatrice just spun off, with a lower payout ratio and a more condensed list of drugs in the pipeline versus one that just spun off that has a higher payout ratio and a higher dependence on a single drug, as in the COVID vaccine. Because here's the thing, Pfizer is going to have to produce enough new drugs to supplement the income that they lost with a Beatrice spinoff. Now, I think this is great for both companies. I think Beatrice is going to flourish without being locked in. I think they unlocked value when they spun off Beatrice. And the reason that I'm really bullish on Beatrice versus Pfizer is the same reason I'm bullish on AbbVie instead of Abbott Labs. They have a great line of drugs that were unlocked when Abbott spun them off. They had a low payout ratio. They've had great dividend growth. I see Beatrice as a possible repeat for AbbVie, which is my best performing stock, and I look at Beatrice as getting in on AbbVie right after the spinoff. So even though the dividend payment is pretty minimal for the stock overall, 11 cents versus 39 cents, so of course Pfizer would come out ahead when it comes to actual dividend payment, but with a really, really small payout ratio of only like 12 to 13%, so below 20% for Beatrice. They have drugs that already generate multi-million dollars worth of profit for the company. Plus, they've got a lot already in the pipeline for a new company anyway. They have generics as well of some of the biggest drugs in the world. So they've got, I think they've got a really good foundation to build that dividend. And I would much rather own 300 shares of Beatrice with with the projections that they're going to grow the dividend at a pretty accelerated rate versus a company that has a PE and a payout ratio that is unmeasurable because they're not generating enough cash flow in ExxonMobil's case, or one that they're pretty strapped for cash simply because they are, I feel, too dependent on a single drug, which would be Pfizer. So I just think out of those options, I think Beatrice definitely has more upside potential and has more dividend growth potential. So I'd rather sit on these shares for the next 5 years, 5 to 10 years, like drop in the bucket, not really worried about it. I'm focused on the dividend, not even the price, not even the possible gains that I have for capital gains for the stock price. So I just think there's too much of an upside in Beatrice to ignore it. And if I'm wrong, say Beatrice doesn't grow the dividend substantially over the next 5 years, I could still switch it out for Pfizer. So, but I do really think that with the drug pipeline that they inherited from being with Pfizer, plus what they have in the pipeline already is going to be pretty substantial for the company and allow them to grow that dividend with such a low payout ratio. It's kind of a golden goose when it comes to dividend growth. Next, we're going to take a look at my year, so about 26%. I'm going to keep that in mind. Next, we've got Allstate, one of the biggest underwriters of insurance. They're up there with State Farm and Berkshire. I originally owned this stock at, I think, 132. Let me check. Yep. Yeah, 132.83. Only 6 shares, so love them. And it's lower than what I bought it at originally, so right now, technically, it'd be a great time to be buying Allstate stock. Then, of course, we got Travelers. Love them as well. I wanted more insurance, so I picked them instead of McDonald's. I also liked them more than I liked ExxonMobil. So these two insurance companies get a lot of premiums. They both have a very conservative investment philosophy with their float. They're both in treasuries, and that's like a 3 to 5 well, like, I think it's like 1.5 to 3.5% return on their money, and each of them have about $6 billion in reserves for a mega cat or a super cat or a black swan event that would affect the insurance companies quite negatively. The reason I like Travelers more than I like Allstate, though, is because they've never cut the dividend. Allstate during the financial crisis did slash the dividend, but they've done a very good job of growing it, so I'm willing to overlook that dividend cut as long as the payout ratio doesn't get too crazy, which right now both of these companies are sitting at around 30, I think it's like 33%. Like, they're both at less than 40% or 35% of their overall free cash flow, so happy with that. Happy with both metrics on both of these companies. And I just want to round out the portfolio with insurance. Then we got Berkshire. Our total was 27. They are at 29, so we're only like 2% behind Berkshire, which that's, I think, the closest we've ever been. Then we've got the NASDAQ, which they're pretty high right now, 53%, so we're not even close to them. They've doubled our return. And then the Dow Jones sitting at 26, so we're even with the Dow. And the S&P is at 34.5, so we're about 10% behind the S&P, which is fine. Keep in mind, guys, we're not trying to beat the market at all. I just like to look and see how I'm doing, compared to the, compared to the overall markets. I'm going to do the Dow Jones, because I did not mean to do that. My finger slid. So here we go, Dow Jones. Make sure we got that down there. Okay. Oh, yeah, Dow Jones right under the NASDAQ. Alright. So with all that being said, guys, thank you so much for watching. Remember to hit the subscribe button on my channel, That Dividend Guy. A lot of the viewers that are watching, like 70% of you guys, aren't even subscribed to the channel, which if you're watching on a consistent basis, you might as well be subscribe so you don't miss any uploads. So make sure you hit that subscribe button and that bell notification so you don't miss any updates. I post a Robinhoid portfolio update Monday through Friday. I let you guys know all my buys and sells. I try to cover dividend increases as much as I can, as long as they're substantial enough to cover. I also do Tesla news and other stock market news that I feel is relevant towards dividend investors. So I try to have consistent content for you guys out every single day. And if you guys appreciate that, make sure you hit subscribe. Thank you so much for watching, guys, and I'll see you tomorrow with another Robinhood portfolio update. Take care.